in a constant state of fear and misery. Do we understand anymore? And live in a constant state of fear and misery. Do we live in a constant state of fear and misery. Do we understand anymore?
Hello, everybody. Today is Monday, December 3rd, and we're bringing you Block Digest number 143 at block height 552,399. So what is up? This is late for me and early for you.
Yeah, super early for me, but it sounds like you are, you're up, man. I mean, it doesn't sound like you're going to bed, so that's good. Last episode, I think we were trying to keep you from falling asleep, so it sounds like you're a little more awake for this one, so that's good. But how are you guys doing, Janine?
I'm right in the middle.
Yeah, I was thinking about that. It's like this is the weirdest time schedule. It's like I'm like 8, you're like 8 or 10 hours ahead of me, and then Shinobi's like 8 or 10 hours ahead of you. It's like we are literally 3 people on opposite ends of the globe trying to get together to have a show here.
We got the short end of the stick.
No, man. It's day's just getting started. You're already good to go. But what's been going on, man? It's been a week. I know you've been busy doing a lot over there, but what's been going on in the world of Bitcoin, man?
A lot of stuff, but I'm going to take one more moment to dwell on the fact that you had to get up early. I could be getting drunk right now, and Janine's just having a normal, non-messed up day. I hate you, Janine.
Well, I wouldn't say that my days are ever normal, but definitely more normal than either of you. So, before we start the show, we should do a check. Has any of us done anything regarding ICOs that we need to disclose right now?
Yep, I've called a lot of them stupid and retarded, and people who invested in them idiots.
Okay, so we no SEC is going to come and like take over the podcast. Okay.
I don't think so. I think we're in the clear on that one. Yeah, I was thinking about it after reading the story too, and it's just like going over in my head. Yeah, we cover all our bases on here, so yeah.
Because if any of you have, you better disconnect.
Disconnect.
Alrighty. Let's catch up on the stuff that has been happening while I'm living in Party Town. All right. So I guess first up is Blockstream has released a bunch of stuff related to Simplicity, including a bunch of source code, specifications, and a much more in-depth technical report than they've ever done on the language so far. And I mean, this is pretty awesome to see because honestly, there's still a lot of work to be done, but this is something that I thought was, in terms of timeline, like years down the horizon. But they've released both denotational and operational semantics of the language in the Coke proof system. I refuse to pronounce that like cock. They've released an interpreter and a type checker written in Haskell. They've already implemented a few important crypto primitives like the lib. Oh man, I always forget these letters. Libsec, libsec P256K1 has been re-implemented in Simplicity. And there's now actual code you can tinker around with, and you can actually try to construct things in the language. And I'm assuming they're also going to definitely be looking for feedback. As well, there's now something actually implemented that people can play around with in terms of building out or repurposing existing higher level languages to compile down into simplicity. So we actually have an opportunity here to build out like a full language stack, where instead of having to deal with something that's metaphorically down at the assembly level, people can actually start constructing simpler languages that, unlike something like Solidity and Ethereum, is actually safe in terms of compiling down into Solidity, which can then be ran through all the different proof systems and type checking to make sure that there are no errors or bugs like we've seen pretty much through the entire history of Ethereum and the long list of broken smart contracts that have been deployed on it. And down the line, there's still more to do. They want to actually complete a version of the interpreter in C and re-implement a library of basic primitives and functions in C, and then actually use a proof system to verify that the C interpreter is going to be operating correctly and interpreting scripts written in the language correctly in a way that's foolproof. And then finally get around to implementing an integration of simplicity in the Elements blockchain, which would lead to it actually being deployed on Liquid. And this is where I think it's really interesting because, obviously with the state of things, we are quite a long ways away from this being rolled into Bitcoin proper itself. But something like Liquid or any other sidechain platforms that are based on Elements that are deployed anytime in the near future are one of the perfect places to test something like this, especially Liquid, given that its entire design and purpose really is to act as a platform for institutional players dealing with effectively financial contracts, trading, swaps, futures, OTC desks. And these are exactly the kinds of use cases where you would want more complex smart contracts beyond just send to this address or time lock it or hash lock it, to actually cover all the bases in terms of potential outcomes when engaging in a financial contract like that. And so before we start getting ahead of ourselves and really looking to roll this into the main Bitcoin chain, we can actually see on an isolated sidechain environment how these types of tools actually bring something new or some new use case potential to that in an isolated environment where we're not putting things at risk on the main chain in terms of introducing a lot of new complex features. I mean, the first thing that really jumps out to me is if this were rolled into the main Bitcoin chain, one of two things is going to have to happen. Either the Solidity interpreter would effectively have to take the place of the current script interpreter in a Bitcoin node implementation, which would mean now we're running the risks of all previous versions of Bitcoin software having a consensus conflict or failure with the Solidity interpreter in terms of looking at the validity of legacy Bitcoin scripts, or you would effectively have to have two interpreters of the scripting system in an implementation, which again really comes with the same risks there to some degree. And it just really kind of sucks. Like some of the best, most exciting things, in my opinion, that are happening in this space are just obscure technical improvements like this that most people really don't grasp the implications of, or how this can really open up new functionality in the system. And it's very, very slow rolling. Like this isn't like the DAO where, oh, we're going to hack together a smart contract and it's there next week. And what happens? Like, this is going to take a lot of time and actually ironing things out as it's built and really covering all the bases, because this is not the kind of thing that you want to fuck up. Like interpreting the validity of a script in a system like this is pretty much the bedrock foundation of how a platform like Bitcoin works. I mean, that is literally the core of everything. Like the entire proof of work system, the blockchain data structure, all of this comes down to cementing a history of scripts that have been executed and previously proven to be valid in their own right. And so this is definitely something that care and time needs to be taken before trying to just jam this into the main chain all willy-nilly.
For sure, man. I mean, like we've seen all the hiccups that Ethereum has had with these different problems with these ICOs, like the parity problem as well as the DAO, and just these sort of just rushing to try and get to where we want to be. I mean, it just leaves you open to all these problems if you don't have that base layer of making sure that everything is valid and it's in the correct order. And I mean, if you don't have that, it just leaves you to all those security holes. And so, yeah, I mean, this is 1 year after, a little over 1 year after we had heard of Simplicity, that we're getting this repo. And I mean, Bitcoin is just a little over 10 years in just from the white paper. And I mean, this is still slow going progress, but it's this is the new way to do development if you're going to be working in Bitcoin where people's value is at risk. And I mean, it's slow going, but I think it's the right way to do it. Simplicity is going to just make things a little bit more open to the like right now, we just got time locks and hash locks and the different scripts that are available right now for Bitcoin where, this just adds a whole nother level to it. And, working with Liquid, I mean, I can imagine a lot of these exchange operators and people that are working these OTC desk and, as well as just like all these guys that are trying to set up institutional investors to come into the space. They want to see stuff that, is going to give them the security that Bitcoin has, but they also want some of these nifty features we're hearing all about. And so, I mean, like this sort of opens those doorways to where we could bring those things into Bitcoin. But yeah, it's it's just slow progress, but it's important that that base layer doesn't get messed up. We've seen those problems.
Yeah, and I mean, it's just like the importance is knowing that it's going to execute correctly, knowing that it's going to execute in the resource constraints that are laid out for it, and knowing that there's not going to be like just any kind of unexpected behavior or uncertainty about those previous things. I mean, like looking at Ethereum, like we've had bugs that lost people money because resource use of a smart contract exploded way beyond what was defined in the contract. Like we've seen the entire DAO incident was because of undefined behavior, allowing one aspect of a contract to access funds in a manner where it wasn't supposed to be able to. Like we've seen the oops, I killed it DevOps incidents where money was literally hundreds of millions of dollars was rendered completely inaccessible because a smart contract allowed the user to delete functionality. And I mean, it's like you can't have like the risk of things like that on a system like this. I mean, it just normal technology, like failure in car systems and aviation systems, like all things that literally have people's lives on the line are a huge enough risk. You have to cover that base in a way that is up to the scrutiny and the level of security and perception of risk that areas like that are, because this is like once something happens to people's money, it's happened. The state has changed, and you are not going to convince people to just roll back the system or violate the global state that the network has arrived at just because, ooh, I fucked up and that did something that I didn't want it to. Like once that happens, it's done.
Yeah, that's pretty important whenever you got people's value out and around. And goodness, I think they said that this year that Bitcoin's routed like $2 trillion in commerce. Like even though the price has been dropping, I mean, you don't. That's a huge economic market you can't fiddle with.
Mm-hmm.
I did happen to see something, I think it was yesterday, that someone said that Mark Karpelis had been storing his Bitcoin. Where did they? Mark Karpelis didn't have any kind of backup for his Bitcoin. I don't know. I don't remember if it was personally his Bitcoin or if it was Mt. Gox Bitcoin. It could have been either, to be honest, because he's that stupid. But he apparently didn't make a backup for his coins or, share any kind of, seed copy with anyone. And so if he had died, like 430,000 Bitcoin would have been lost.
Yeah, and that's exactly why you would want like more complexity in a safe way in the scripting system, because that allows you to have multiple levels of access controls and conditions in which each individual level can be exercised. So it's not as simple as here is a key, the key is held by whoever has it, and if access to that is lost to those people, that's it, goodbye, end of story. Like the more that the scripting system can be extended in a safe way, the more options people have in terms of covering their bases or their asses, and safeguarding access to that money in a way that doesn't fundamentally undermine like that self-sovereignty and that self-control over funds. It's like it's that balancing act of being able to have that level of total control, but also tools at your disposal that will help cover your ass from fucking up that control and the responsibility that comes with it.
Yeah, and my favorite comment, I think it was Wex Security, that company that did like analysis of where the Mt. Gox coins went and how they got hacked. My favorite comment about Mt. Gox in general was someone in the audience said that they decided never to use Mt. Gox because of how they indented their CSS, which is hilarious.
Yeah, there's some. Sorry, go ahead, man.
I was just gonna say it's not that silly. That's programming hygiene, proper formatting. If you're not doing little things like that properly, then what else are you not doing properly? And sorry about the background noise, if any, guys, but I'm a nicotine addict.
Can barely hear it, but yeah, like I mean, you can hear it a little bit, but it's all right. Yeah, I mean, that's just like one of the major key issues with a lot of this whole, SEC getting involved with this different exchanges and all that. It's got a lot to do with just like they want it to be more like these custodial solutions sort of locked down. They don't see the exchanges really evolving that much since Mt. Gox. And, I kind of, I could see where their point is. And, seeing something like Liquid and Elements and Simplicity and these and Lightning Network, these things coming online, I think you can see what would make them happy and kind of be like this next level of exchanges where, people would be feel a little bit more secure about what they're getting involved in.
But yeah, so like this is like I don't expect any kind of instant overnight results, but it's really going to be awesome now that some code has been dropped and we have more of a concrete roadmap ahead of us as far as simplicity development to really see this unfold. Because like this, it's like this is what is needed going forward. It is not just a stupid thing like we'll have a browser plugin and you won't have to think about wallets, or crazy like scripting systems like in Ethereum where there's a million ways to fuck something up. Like you need a way to really balance that. And I honestly don't see anything else out there really working towards like that type of balance in a way that I think will actually produce results. All right.
I agree with, and yeah, I'm just like looking in the chat, getting a little too busy this morning. But yeah, so what else has been going on, man? There's a lot still we got to cover. We got to catch up.
So, well, the U.S. Department of Treasury, OFAC office, they made a little bit of a doozy of an announcement that I noticed. I actually got pinged by somebody on Twitter about this while I was drinking in a bar, and like honestly, this is huge. Like I think, like this is the first step, I think, down the road of winding up in a court arguing the legitimacy of chain analytics. Like this is the first step down that fucking road. Like so just shorthand, like the cliff notes. Two Iranian citizens, Ali all right, Khorashadizadeh, I know, and Muhammad
Are you trying to pronounce these?
Gorbani.
Let's just say two Iranian citizens.
But were pretty much found to be involved in helping launder funds from a ransomware software, Samsam, into Iranian real. And there's a long history of, I think, over 6,000 Bitcoins that have been seen flowing through this address. And they've dealt with a huge number of exchanges and businesses in this space, some of which the Department of the Treasury is actually saying are U.S. Exchanges, and just facilitating moving this money into fiat after being collected in Bitcoin. And not only were these two individuals put on a sanction list, but two Bitcoin addresses, like that, were actually put on a sanction list. So, like, in the first time in history, we've actually just had a public cryptographic key be subjected to governmental economic sanctions. And like that, like really, I've seen a lot of people trolling and a lot of people laughing, and I've seen a lot of serious discussion about this. And it's kind of hard not to just laugh at the absurdity of it. But like this really is profound in terms of the implications that this is going to have in the space going forward. Like, first off, like when you're talking about being sanctioned, like as a U.S. citizen or anybody else subject to these sanctions, you are not allowed to interact with these addresses. So what does interact mean? Like let break this down. These two addresses are on this list. So first off, and most obviously, you are not allowed to send Bitcoin to these specific addresses. All right, that's pretty clear cut. That's simple enough. But in terms of receiving money, it gets really complex really fast. Like both of these addresses are empty. So these coins have clearly been moved. They've transitioned to new outputs, encumbered to new public keys. And the minute they move from these addresses, it becomes a ridiculous guessing game. Like all you have to work with at this point to tie any coins to these addresses is chain analytics. And it's really just guessing. It's really just making huge assumptions about the patterns in transaction structures, and then just following down a long chain of connections where the certainty or the accuracy gets worse and worse the further you get away from that, and just assuming a connection. And so what happens if, I don't know, let's say that these guys go start a YouTube channel somewhere and just start talking about Bitcoin or politics or whatever the hell it is, and they have an address for donations, and you send a donation address. And now all of a sudden, because of the heuristics that a chain analytics company uses, that address is tied to these sanctioned addresses. There's an assumption made about common ownership. And now all of a sudden, you are considered having economically interacted with these sanctioned individuals. How the fuck could you know that? What information is available at your disposal to make you aware of those connections? Are you now, is there now a burden upon every Bitcoin user to have knowledge of all the interactions between different addresses that they might be interacting with? Or how about in the case of Laurent from the Samurai team, from the OXT Explorer? An example he pointed out was pay to endpoint. And the example he gave was two women attracted to the same man. One of them was dating him and one wasn't. And the ability for one of them to take funds received from the woman dating this man and create a pay to endpoint transaction to a sanctioned address with that payment. And now, because of how most chain analytics heuristics work, they're going to see the input that the second woman received from the first one, put in a transaction with an input that is identified as belonging to this sanctioned individual, and they're just going to assume that both of those were the first woman's funds and that she's now directly sent money to this individual. What? They're what? The entire assumption about inputs implying common ownership that most chain analytics companies make just went out the window. It's an inaccurate assumption. But if that is actually accepted as a reasonable proof in a courtroom, she's now guilty of violating international sanctions. So there really is no way around it. This kind of action is going to lead to a huge courtroom battle over how accurate the heuristics that these chain analysis companies use. And it's either going to cement a precedent where just completely arbitrary guesswork, which is really what these companies do, is good enough to convict somebody of any kind of criminal activity involving the transacting of cryptocurrencies, or it's going to set a precedent that this is just pseudoscience and that none of the assumptions that these chain analytics companies are making about coin ownership and connections and transactions have any business whatsoever being used as the basis of a legal or regulatory decision. And it's this is the first step. They have set this precedent. They have sanctioned addresses on the Bitcoin network, and there is no turning back from that. This is I obviously I'm not going to make any claims about how long or when this is going to happen, but it is at this point inevitable.
Yeah.
Well, can I first just point out how weird it is that it's called the sanctions list, because the word sanction means to give approval. So realistically, realistically, it should be called the U.S. unsanctioned list. For the other meaning of the word, because it comes from sanctity, which means to make holy or to be holy. So if you apply the direct interpretation of this U.S. gives sanctions to addresses, it's like the U.S. has made them holy or has approved them. The language just doesn't make sense to me. So I seriously think they should just change it to the U.S. unsanctioned list. It would be a lot more clear. But yeah, I find it interesting, and I think that the fact that this would screw up chain analytics in terms of the legal consequences, I mean, that's fine with me, because I think there is a lot of pseudoscience behind it, where they're kind of just guessing in the dark about what a very limited amount of data means, because they also usually the only meaningful data is when they're able to directly correlate it with what was gathered from an exchange, and that's not included in the blockchain. That can sometimes be a lot more useful than anything you could get out of just scanning the blockchain data. But yeah, because I can't remember who brought it up, but someone on Twitter said that obviously this is a problem when Bitcoin addresses are obviously their pull, which means that you can't stop someone necessarily from sending you Bitcoin. So you could unknowingly, unintentionally interact with them. Like, it's one of the things that's come up before where someone, a hacker steals Bitcoin, and what they do to just kind of troll people probably, or just maybe it's part of their anonymization strategy, is to like dust a bunch of random addresses with coins so that everyone is like, oh, well, I just got this small amount of Bitcoin from, an address that I don't know. And what does it mean? Well, it basically just taints your address. And so if you go to then spend from that address, if you're not spending specific outputs, most wallets don't really let you do that. If you're not doing that, you end up spending, your other coins with this tainted output, then your whole transaction is tainted because now they're mixed together. So yeah, that's going to be interesting to see how they end up, if someone actually does take advantage of that and do that with this address or with any address in the future. Yeah, that definitely needs to be cleared up, that you can't prevent someone from doing that.
Yeah, there certainly seems to be some I don't know, some misunderstandings there as far as like just the language, like you were saying. But I mean, they've been fiddling with language for a while now, to where basically you can find your way into an issue where you could be you can have actions taken against you because of, yeah, even the language is kind of messed up. But I mean, definitely worry about, I think that's the taint issue, where they just like taint as many wallets as possible and try and just mix all these UTXOs up to where, like, yeah, are you going to start trying to say like this UTXO can't be spent? Or I mean, like, really, to me, it just sounds like this is a way to set up enforcement. Like the addresses, right, is where they want enforcement, but like the enforcement is really going to be on any citizen or someone from the West giving to those addresses. Those addresses are not really censored. Like, we know somebody could send Bitcoin there, but the real censorship is going to come into the people that are making the transactions and have a correlation with these addresses. I mean, similar to the other thing we saw was the executive order from Trump saying anybody invested in the petro, you're going to violate U.S. sanctions. And it's like they're saying these guys are sanctioned, but the reality is it's the populace that's sanctioned, saying you can't, transact with thought with these guys because they've been considered to be enemies of the state or just like a terrorist, or however they want to label them.
Well, I mean, that makes sense. Like that, like the petro is an entire currency. It has a clear connection to a government, and it's not something where there's this amount of absurd guesswork involved in identifying whether you've interacted with something or not. But like a specific address on a network like this, like it's like, and I think like this is gonna prove a point that I've harped on about for a while now, and it's like, privacy on a technical level in Bitcoin is obviously important, because governments, like businesses, they're going to track us, they're going to surveil us, they're going to try to data mine this, like everything in the digital age. But like the thing I think people continuously forget is fungibility is not privacy. Like, fungibility is historically a legal concept. It is not something that results from being unable to tell things apart. Every fiat bill in the world has a unique serial number. It's that it's legally required to treat it as if you cannot tell it apart if there is not a direct connection to a crime. Like, if I steal a dollar bill from you and I get caught, like, and you've jotted down that serial number, you have proof you had it, and I get busted with that, I'm fucked, because I stole from you, and there's direct proof linking to that bill of it. But if that winds up in somebody else's pocket through no fault or illegal action of their own, it's not being unable to tell that bill apart from others that makes it rightfully your property. It is a legal ruling of fungibility. Like that, it's a legal concept. It has nothing inherently to do with things being physically indistinguishable. It's being legally indistinguishable.
Yeah, and I just also want to point out, because obviously people are talking about what are the consequences for miners, and I haven't seen anyone say directly that because I think it was Aaron Verdum who said that someone did send something to the address. I don't know if you guys saw it, but it was like a SegWit 3 fuck. Like that was the beginning of the address. Did that actually happen? Was that sent to the address? Because I didn't really confirm it.
Yeah, it was like 320 confirmations last night. It's in the show notes.
Yeah, so when that happens, I mean, obviously, I think if you include a transaction in a block, it gets mined, you get fees from it. If there was transaction fees with the transaction from that was sending to that address, I mean, I can see that being considered interaction, and it would be hilarious if the US miners would be like, well, we can't include this transaction in a block, and they end up doing like a network fork because they can't accept a transaction that the rest of the network is willing to accept because they don't care about US sanctions or unsanctions. They don't care about the unsanctions.
But see, that's the thing. There is like a miner is.
Uh-oh.
Cut. I think you cut
Yep.
out.
Yeah, he did. Shinobi, you cut.
Well, no, I was just gonna say, like, comment. You know, you there? All right, you back. All right, go ahead for it.
I sat on the mute button, but yeah, a miner is not a responsible party unless they put that into a block themselves. If you want to really stretch things that far, and I think John Carvello made an interesting point that if you do have like governments out there trying to really pressure miners with compliance requirements like that, well, hey, if people sanctioned like that really want to toss up enough fees, I'll just go solo mine instead of mine at a pool where you can find evidence that I'm the one who mined it. And what can anybody do about that?
I don't know. That's where, I mean, like, Janine raises an interesting point, and like, I'm just thinking about, like you're saying, this is kind of an attack on fungibility and the way that the law is writ. And I mean, like, maybe it could cause a problem where they've got these guys that are trying to go along with what they're saying. Because I've seen some talk on Twitter about introducing a bit with banned addresses and stuff like that. And like that just seems like an opposite direction from the roadmap of Bitcoin. And but I mean, like, I could see some people being like, oh well, they want us to do it, we should do it. But I mean, like, yeah, I mean, what's to stop them from going out and doing their own thing? I mean, this is where, I mean, it's like a technological race to against an adversary. I mean, it's like we kind of got to keep working with these coin joins. Like, maybe there should just be wallet implementations where everybody has a coin join and everybody's coin joining, like doing things to increase fungibility wherever possible, instead of, and like, you have this enforcement trying to degrade that. So I mean, like, I think Janine raises a good point there as far as like it could possibly cause a fork.
Yeah, I think it was Andreas who said that you can keep your country out of Bitcoin, but you can't keep Bitcoin out of your country, or something like that. Like, if the US decides that it's going to try to enforce some kind of ban list and like get a bunch of people to submit a bit, first of all, that's going to be a major slippery slope, because then they're going to say, well, if you're going to put these addresses on a ban list, how about you just put more of these addresses on a ban list? And it'll just keep expanding and expanding and expanding. And that it's going to be kind of like the chain analytics stuff, where, it becomes impossible to keep up with, because you have to like check when chain analytics firms do these, like, they try to track taint, they try to go X number of blocks back. Well, when they say, oh, we're going to go 7 blocks back, then a hacker comes along and says, okay, all I need to do is then make 8 transactions, and that's that would be 8 blocks back and it wouldn't get caught by them. So it just keeps expanding and pushing things out more until eventually it's so hard to keep track of that it's pointless. So yeah.
I think Blake and Huddle are raising a good point that like not many miners even know really how to go about censoring a transaction right now. And like Shinobi's saying, I mean, there's things where like the miners can move. I mean, like this might be one of those decisions that comes down that gets miners to say, well, you know what, this regulation is just like it just totally goes against our entire business model and our plan moving forward. So we're going to have to jump over to Canada or, go down to Mexico or something to where we don't have this enforcement coming down on us.
Yeah, like a lot of people still don't know that the mining process is automated. They think that when transactions get included in blocks, that miners are specifically including certain transactions. Now, in some cases like Bitmain, they for a while, I don't know if they're still doing it, but for a while they were deliberately excluding SegWit transactions or any transactions that involve SegWit addresses. So it's possible they can do that, but people still have to understand that's an automated process. That's extra work they have to do. That's, in the case of Bitmain, it was an ideological thing, and I don't think that it helped them in terms of the money. It's more profitable to try to include as many transactions as possible with the highest fees. So if they're going to introduce a ban list, that's something that miners would have to like constantly be looking out for and updating, because like if it gets updated and they don't start including it in their software, that will just keep chugging along automatically, and they won't it's not really them that's interacting with it, it's their machines. Like it comes down to the question of whether we consider automated machine interactions to be choices.
Yeah, I think that this is going to be a long road, Shinobi.
Yeah, but I mean, this is important, and I mean, ultimately, like you can't stop this. I mean, you can be fed the chain through a satellite dish. I mean, we're at the point where you could relay a block through a mesh network, a radio relay, an SMS, like over Tor, like back up through a satellite uplink. Like if some government is stupid enough to try something like that and there's enough profit incentive, then people will just start mining themselves and ignoring it. I mean, it's really that simple.
Yeah, you don't like to see anything like this come down where it's, pushing people out. But I mean, the network will prevail. I mean, this technology's here. You're not stopping it.
Mm-hmm. All right, though. I think we just spent like 25 minutes on this. So, what's going on in the land of the shitcoin, Janine?
I think it was actually 45 minutes total on your section, but so for anyone who doesn't know, there is this I don't even know what to call it. It's a kind of blockchain called Steemit, which has been around since 2016, that has tried to do blogging on the blockchain or publishing on the blockchain. This may be a surprise to people like Civil, which I've been researching for a while. It may be a surprise to them because they think that they're the first. They're not. WikiLeaks has even used IPFS more than Civil has used IPFS for publishing on the blockchain. So what happened with Steemit, I think, let me check the date really quick. There was a post made on November 27th by Ned. I'm scrolling to find his name because I forgot it because I don't pay attention to these people most of the time. Ned Scott, who is the founder and CEO of Steemit Inc. And he posted on November 27th to say, "Dear Steemians," that sounds like a great name, Steemians. Steemit is currently undergoing a structural reorganization, which I believe is important to share with the community. Steemit is a private company that runs the open source Steemit.com, a decentralized app on the Steemit blockchain. As you will find out, they're not actually that decentralized. Steemit also uses some of its resources and engineers to contribute code updates to the Steemit blockchain. In addition, we provide APIs to third-party developers, so. So then you scroll down and given the weakness of the cryptocurrency market, the fiat returns on our automated selling of Steem, keyword automated selling, of Steam diminishing and the growing costs of running full Steam nodes, we have been forced to lay off close to 70% of our team. The remainder of the team is staying on to focus primarily on reducing the cost of infrastructure running Steemit.com and our public APIs and ensuring the community can remain informed of the developments. We have conducted our first all-hands meeting and are prioritizing all the cost reduction solutions we can accomplish in the near term, including replacing Steemd plugins with HiveMind, pitchforking Steam to prune the chain state size from 160 gigabytes to 0 gigabytes. I'm not sure if that's an error. I don't know, because that just sounds like they're pruning it till it doesn't exist
Okay, guys,
anymore.
we're deleting the blockchain and starting over.
Exactly. Yeah, I'm not sure if that's a typo or if he just means that they're going to prune it down to something less than a gigabyte. I don't know. He also says, so they're going to prune the chain state size, do projections for AWS usage because, yeah, of course, they're using Amazon Web Services because no one is actually running a Steemit node. DevOps solutions and reduction of staging and testing nodes and eliminating redundancies. Eliminating redundancies is probably keywords for we have too many nodes. We don't really need this because we don't care about decentralization. So we're just going to like take some of our nodes offline that we control. So this is funny because it just came up in terms of me still following the Civil stuff. Civil, let's see, the token sale that they tried to do, the first one, is now a month and a half ago. And when they ended that one, they said, we're going to do another one in a few weeks, not months. So I'm assuming if they're going to do another one, then they have to at least do it by mid-December because then it will be months and not weeks. But it doesn't look like that's going to happen because of various things, like the fact that they let a bunch of people go. A bunch of the journalists that they're working with haven't even been paid in the tokens, or they haven't. The tokens that they received obviously don't have the value that they were projected to have, according to a journalist at CoinDesk who approached or was doing some research on. Apparently, the CEO was telling people that they were going to be worth a lot more than they were. He disputes that, obviously, because that would be a big deal, because that would imply, future returns. And that's not something you can do if you don't want your token to be security. Bad boy. So the Steemit thing is funny because I feel like a lot of the publishing on the blockchain projects are kind of collapsing, which doesn't surprise me because I feel like the way that this whole Steemit has been around the longest, so kudos. But seriously, your thing was never going to work. This whole idea of shoving a bunch of data into the blockchain and thinking that that's not going to have huge impact on your ability to have a decentralized network. Surprise, like maybe 30 years from now, when everyone is carrying around devices capable of like gigabyte per second connections and stuff, maybe it'll be realistic, but it's not realistic right now. So Steemit is not having a good time. I don't know how long they're going to last, because basically it was really funny if you read the bottom of the post that Ned Scott made. The top rated comment is a guy, I think his handle is ANNYX, and he says, have you guys thought about leveraging a more decentralized back end? Which I don't know if he's being genuine with that question or if he's really trolling them, but like for someone to ask in the comment section, have you guys tried decentralization for a for a blockchain project, it's just hilarious. It's so sweet.
Yeah, ICO when you're supposed to layer 2, you're gonna have a bad time. Yeah, shout out to Ned for being in the funniest intro ever of BU whenever they confronted him about a hack, and he just responded with a calm silence until eventually it just hung up. And yeah, Civil, good Lord, that sounds like a nightmare going on while Vinny Lingham is just on CNBC still touting around that things are going to be okay. He's still a voice in the space somehow. And yeah, it's just I could see the way that people want this. Like I see a lot of people passionate about Steemit, and they're passionate about identification on the blockchain, and like just cutting back to what we were saying at the beginning of the show. It's like you got to have these parameters built out to where things can't become compromised. And especially if you're talking about things like, media where, it could possibly be censored. I mean, you've got to have true decentralization down there. And I mean, I think now people are starting to really catch on that word decentralization might as well just be magic. I mean, it's just thrown around everywhere.
Yeah, and I just want to point out, I don't know whether it's been verified, but someone right below the top comment on Ned's post says that a normal API node for Steemit costs, on average, 1,000 euros per month, so roughly 12,000 euros per year. So, 20, not quite a $20,000 full node, but getting there.
That's what happens when you run a website and call it a blockchain.
Yeah, that's pretty bad. I mean, like, I don't like the fact that, a bunch of employees are stepping out, but, I think Blake nailed it. Steemit was a great 5% concept, 95% scam. And eventually what is the saying? The rooster's going to come home to nest or something. Hen's going to come home to nest. Yeah, everybody's trying to cover their bases now that the SEC is moving around with this crypto sweep, and it's been a shit show over there for a long time. It's just like, now things are starting to kind of wrap up.
Well, I mean, it's like I've been saying this about Steemit for years. It's like a blockchain is not a content publishing platform. Like, you're running a server and it's delivering content, and you made a stupid token to pump and pay people for their content. Excuse me.
Quit smoking, sir. All right, yeah. So we tore Steemit to shreds, but I don't even want to say it. But what's been going on with Google, Janine?
Well, we've talked about Google a number of times, even though it's often not cryptocurrency related stuff, but you've heard us talk about the whole Dragonfly project that Google is pretty much at this point, it's pretty clear that's been confirmed they are involved. If you don't know, it's about building a search engine specifically for the Chinese government that allows the Chinese government to clamp down on things like, news stories about human rights or reports of human rights or any kind of keywords that they don't like, and also allow them to more easily surveil their citizens. And so the most recent news besides this is that Google has been deliberately shutting out privacy and security researchers from these meetings about this Dragonfly project search engine thing. So that's never a good sign, but that's also completely unexpected. If what you're doing is building a search engine that enables surveillance, you wouldn't want to invite, the people who care about privacy into that meeting, because obviously you have completely different interests in that case. But the newest thing that came out, actually on the same day, November 27th, was that a group basically of people working at Google, employees or contractors, decided to get together and actually make a Twitter account and also a Medium post called Google Employees Against Dragonfly. And it's basically a giant list of people who signed an agreement with Amnesty International in telling Google that they should cancel the Dragonfly project because of the concerns about surveillance and privacy and things like that. And they say in the statement, our opposition to Dragonfly is not about China. We object to technologies that aid the powerful in oppressing the vulnerable wherever they may be. I haven't done a count recently on the list, but for like the first couple of days that it was live, I think it was growing by a couple hundred every few hours or something like that. When I last checked, I think it was somewhere around 330 signatures. It might easily be more than that by now. When I checked it, I think that was, let me look really quick. I think when I checked it, it was the day after, so it could easily be 600 something now. So besides bringing up the story, the one thing I wanted to mention as kind of a follow-up is that I've been tweeting about two women specifically, who work at Google as they're pretty high level. I think they're both in a management position, and they're tagged when you go to their profiles for what they do at Google. They're tagged as doing security, privacy, and abuse prevention for Google Chrome. And the reason I look at them specifically is because they're two women with very high follower accounts on Twitter who say that they work for Google. You know, they have a lot of power. And I noticed, I'm going to check right now just to make sure that they didn't, you know, have a change of heart in the last few days. Nope, still names are not there. So Adriana Portfelt, let me get that name correctly. So Adriana Porter Felt, she works at Google Chrome, and Parisa Tabritz, who I think might even be I think she's actually the manager of Adriana. Neither of their names are on this list for some reason, you know, even though they claim to do, you know, security, privacy, and abuse prevention. And I was wondering, like, why is that? Because they seem to be, you know, that seems to be things that they care about. Well, when I was looking through their tweets, I found one from Adriana where she was praising the maternity leave program and the facilities at Google that support working mothers and things like that. So I think, who does that remind me of? That reminds me of a woman named Susan. I think I'm pronouncing her name correctly. I think it's Susan Hennessy. And she used to be a lawyer for the National Security Agency in the United States. And I remember the reason Adriana's comment stuck out to me is because Susan also made a similar comment, I think a year or two ago, where she said that we should give the NSA credit because they have excellent breast pumping rooms, in the entire federal government. And so we should give them credit for caring about working mothers. So I'm just sitting here thinking, okay, so if, a company or intelligence agency in the future ever wants to, do anything really unethical, but still maintain the support of their employees, one of the best things that they can do is make sure that they have great maternity leave, apparently, because that seems to be a similarity between these two companies. Like Google has really, really good facilities. The NSA has really good facilities. And that means you don't criticize them. That's basically what ended up happening.
Well, the Nazis, had really good, care facilities for their Aryan children. So I guess we really can't, shit on them too bad.
Yeah, I mean, obviously they would, kill, they would murder any children who had mental or physical disabilities. But the children that were fine, who were compliant and, ran in the system as expected, they were given, really good treatment and education, all of that. Everyone else, if you have principles or whatever, you wanted to fight back, it's not going to say anything about you. Just going to let you do your thing and post your Medium post saying, we don't want to participate in, oppressing people in another country in exchange for money. But of course, maternity leave, got to have that.
Yeah, it's always some BS heartfelt story to try and sell basically the most poisonous thing. I mean, I kind of it just, talking about this stuff, I get a little quivery and trembly because, I've seen a lot of stuff that I mean, this is just so aggravating. I was discussing this with someone else, just the routes that it's like we're coming up to a societal fork where there's just with the technology, there's people that believe that we can increase privacy and increase people's individual liberties through value transfer systems that are censorship resistant. And we can, encourage free speech and free thought and the free exchange of ideas, basically all of Western values that has been progressing for 3,000 years. It's I've seen terrible things, but let's just go back. All right. There was a bloody Revolutionary War. There was a bloody Civil War. There was a bloody World War, a Second World War, all the bullshit intelligence wars since then. And we're getting to this point now where, okay, there's a group of people that are powerful. And they suggest, though, that we should go to this no privacy route, that these value systems and social media should be censored, that we should use this metadata to figure out which citizens are good, which citizens are bad. We should do this for targeted marketing and censorship. And it absolutely cuts me to the core that these people are here in this country, close to where I live, and supposedly this real independent part of this free country that I live in, discussing these values and ripping apart the past and just saying, you know, none of that matters. What matters is this right now because of terrorism or because of whatever they want to put in that box. These companies should be bastardized and kicked out of this country. Like I hate this, the fact that this is going on. It's really hard for me to just like listen to it and just be like, oh, well, you know, this is just something that's happening. No, this is the fight. This is why I'm here. This is why Bitcoin's here. This is why I take this very seriously. And yeah, I mean, this fight is going to continue on. I mean, like I hope we can settle things like, you know, without too much bloodshed or anything.
Yeah, and to end it on a positive note, though, there was another person at Google that I called out a little bit. I mean, I asked him more of a question because people were asking him, like, why aren't you criticizing Google, what Google's doing with this Dragonfly thing more? Like, you work for them. What are you going to do about it? And so this guy, I think he's described in the list as a senior software engineer. I think he actually does open source crypto library stuff at Google. So good work, but especially I wanted to call him out for this. His name is Filippo Valsorda. And so I kind of called him out a little bit because he wasn't really, you know, taking a stance on Google, but he included his name on this list. So I would like to give him kudos for that, because unlike Adriana and Paris, yeah, he decided to at least do the minimum thing of, you know, taking a stand by putting his name on the list of people who disagreed with what they're doing.
Yeah, at least it is good to see some pushback internally from within the company, and seeing it in a couple of different routes. But yeah, just because we've kind of been, you know, chit-chatting a little too much, maybe we should just keep moving into this discussion of a report put out by CoinSource Research. And yeah, it's the second report of this year on Bitcoin mining, titled "The Bitcoin Mining Network: Trends, Marginal Creation Costs, Electricity Consumption, and Sources." It has some real interesting information and data points to look at when thinking about the current landscape for miners. Since the last report they put out in May, the Bitcoin hash rate has increased from 30 exahash to 40 exahash after falling recently from its September high around 55 exahash. And the price change in that same time period has fallen from 8,500 to 4,000. And the increase in difficulty and reduction in price has put a notable strain on miners running older, inefficient hardware, like we discussed in our last episode, and some of the pictures that went kind of viral out of China. But researcher Christopher Bendixson put out a good Medium post to comment on the report and how miners consider different variables in running their operations. He does a good job of breaking down miners' capital and operational expenditures to factor in their return on investments. And he says there's two cutoff levels for Bitcoin prices that matter. The first is a all-in return on investment breakdown level, above which they make a profit, below which they make a loss on their investment. The second is their cash cost break-even level. I'm sorry, I'm supposed to say break-even. So the second is their cash cost break-even level, above which they are cash flow positive, but still potentially making a loss on their return on investment, and below which they are cash flow negative, and thus, depending on their industry view and their risk assessments and capital, are likely to shut off their gear. So in this report, they are assuming a market average capital expenditure based on all available pricing information, with electricity cost of 5 cents a kilowatt hour and an 18-month depreciation schedule. Puts the current creation cost for Bitcoin at $6,800. And they also estimate that the operational expenditure component of this all-in cost at exactly 50% of the total at an 18-month depreciation schedule, which means the market average cash cost at their assumptions is approximately $3,400. And so with the price of Bitcoin still hovering around $4,000, we are near that cash cost level, causing a significant amount of mining gear to be removed from the network. It's important to note that this information was drawn from average figures, and there are miners out there who have operational costs a little lower or a little higher. And Coinshares notes that given the right conditions, miners can still profitably mine Bitcoin. And, you know, I think you boiled down it pretty nicely in that Medium post saying, yes, Bitcoin miners are shutting down hardware and exiting the network. No, this is not going to cause a death spiral. We should also mention that this morning the difficulty dropped 15%. So you know, it's possible some of those miners that exited will be coming back on. We'll see. Have to keep monitoring. That just happened this morning. Another major aspect of the report being discussed is that research suggests Bitcoin mining is one of the cleanest industries on the planet. Coinshares admit it's difficult to measure the difference between renewable and non-renewable energy use for individual mining operations, but the company makes some educated guesses based on the data they collected. It shows that miners in China are trending to where renewable energies are being curtailed from the fear that they will overload the grid. Instead of that excess in renewable energy being wasted, it's often sold to these cheap miners. And the mining in China is mainly done out of the Sichuan province, which has 90% renewable penetration. And the data also shows miners are setting up operations in Scandinavia, Canada, the United States, where there's cheap electricity, friendlier regulation, fast internet connections, and cooler climates. And when Coinshares adds up all the hash rate being used in areas where there is a high percentage of renewable energy penetration, it totals to 77.6% of total Bitcoin mining is using clean energy. And this is a 19-page report that had a lot of good detail in it. I'd suggest you cruise through it to help counter any and all that Bitcoin is going to destroy the world FUD out there. It's really well sourced too. I mean, it's like all the sources are linked, and yeah, it's pretty impressive research as far as you know, trying to counter a little bit of that Bitcoin's going to raise the world's temperature by 100 degrees, or you know, that we're going to fall into a death spiral because of you know, hash rate not moving the right way, or whatever people are saying. But what do you guys think about this story? Did y'all catch a look at this report or hear any of the talks about it on Twitter?
Just a bit of the commentary on the renewable percentage of energy consumption, which really honestly isn't that much of a shock to me. But I don't know, mostly just because Hado keeps screaming about it. I wanted to talk about the death spiral for a second, and the idea that the price goes down too hard and the Bitcoin network dies. I mean, it's really absurd. Like on one level, it's ignoring the fee dynamic, which acts as kind of a down regulator. If the price goes down and hash rate disconnects, block intervals grow, fee pressure builds, and you have a growing income in terms of fees. And then also really the one thing I still haven't seen anybody mention is we have a pretty robust market at this point. And given how prevalent access to futures are, any kind of sizable mining operation can hedge their operating costs. So if you're hedging yourself properly on a futures market with leverage, you can take a fraction of the capital you have available and hedge short. And should the price continue dropping drastically lower, you can actually maintain the operating capital that you need to continue paying bills when you would otherwise be at a loss. And like that's a really important thing to look at in terms of this ecosystem, and something people really don't think too much about in terms of how the market maturing is actually dealing with a lot of potential threats like this. Like if you're a large miner and you're not hedging yourself when you see downturns in the market like that, you're an idiot. And you're going to run yourself out of business and pretty much just have your share of the market eaten up by people who were intelligent enough to hedge their operations like that. Because once you start getting into large enough operations, like you need to manage your risk. And future markets, especially in terms of mining operations, are a perfect tool to do that.
Yeah, I think there was another good comment just talking about how like mining from the Medium post, mining costs will always tend towards the price of Bitcoin minus a narrow competitive margin. However, these dynamics are not instant, and there is an asymmetrical delay in the trailing effects. as far as, you know, if you want to be competitive and you're in this mining game, you have to, hedge your cost. You have to understand that there's other guys that are doing that. And if you don't, you know, you might fall out of this game.
Sorry, do you have something to say, Gene?
Yeah, I just wanted to point out that I actually submitted an article from Market Watch that I saw today to the Bitcoin Obituary website because it's titled "Bitcoin is Close to Becoming Worthless," and it's talking about this whole death spiral thing. I'm trying to find the part where they made this argument that even though we've had like big drops like this before, that this one is somehow different and will kill Bitcoin. I can't find it right now. Let's see. Yeah, basically, like it's such a snarky article, and that's why I submitted it. I hope it gets accepted. It ends with, "After all, I can still give my wife a bouquet of tulips and make her happy, and I can still give Beanie Babies to my grandchildren to play with. But what am I going to do with a set of numbers that I cannot prove makes me an owner of anything?" It's like, oh, and by the way, this is a professor of finance at Santa Clara University, so kind of a nail in the coffin, another nail in the coffin for educational institutions.
Jeez.
Mm-hmm.
It's like, hey, buddy, you know what else is just a number? The money in your bank account. And it definitely doesn't prove that you own anything because you really don't own it. It's just numbers and your bank controls it.
All right. Yeah.
Rocket science.
The thing I wanted to say specifically about the study involved is that there was some people that were really getting fired up about whether the renewables percentage was accurate. There was a guy, let me look really quick. His name is Maximilian at Fiege Max, FIEGE_Max. And he did this whole thread about how the study was not accurate because he was saying that they didn't account for intermittent power when it came to like hydro or wind or solar, because obviously wind and solar, that's highly, dependent on the time of day. Hydro, I think, is, someone was saying it's seasonally dependent, and in some cases it's not seasonally dependent. So I mean, I don't necessarily agree with all his arguments. He did have an interesting article that I didn't necessarily agree with, but I thought it was well written at the end of the thread. But I would like to know because I read the study and I didn't see anywhere where they talked about accounting for intermittency. So I don't know if they did factor that in or they didn't. Considering that they say that it was a conservative estimate, maybe if they did not include intermittency, then maybe it would drop to, I don't know, 50% or something like that. But the point is that the use of renewables in Bitcoin is a lot higher than people think. It's definitely higher than the global average because obviously if miners are incentivized to find the cheapest and most reliable sources of energy, they're going to go to alternative energy because it's not as well distributed. It just makes sense. So even if it's not as high as this 78%, maybe it's even higher, we don't know because this is considered a conservative estimate. But it's definitely high. It's a lot higher than people think. And it's high enough to justify shutting up about all of this burning the planet, like Rick said.
Mm-hmm. Alrighty, though. I think we have 45 minutes left and 8 things to get through, so I'm going to just dive into the next one. Intel was just recently awarded a patent for SHA-256 ASICs. And I do want to point out that this is obviously something anybody with a brain has been kind of looking towards for a while. But Intel fabbed the chips that 21 Inc. was producing before they pretty much stopped mining and rebranded as Earn.com and started shifting into micropayments, and then didn't really do anything after that. But I think this really shows that they haven't kind of ignored the space. they just haven't FOMO'd into things in a frenzy, in the sense like we have to jump in and start producing something immediately. And really, the two things covered in this patent, I think, are really showing a lot of kind of patience and long-term thinking in what they're optimizing. And really, the two big things that they're optimizing here are how the block header hash is actually delivered to the ASIC chips that are actually doing the hashing for the proof of work, and attempting to optimize the latency between the control board and the actual ASICs, so that you have less of a less of a latency in between each actual hash being done. And then secondly, and I thought this was really interesting, is right now when you are checking the validity of the work, you're actually having the machine take the hash produced by the ASIC chip and bit by bit compare it to the difficulty target in the block header. So you're actually looking at both of these, byte chunks, and doing a whole comparison of them. And the second thing the patent is covering is pretty much for a difficulty round, just hard coding the number of leading zeros and actually just checking a hash to see if it meets that criteria, instead of bit by bit comparing it with the entire header and the entire difficulty range. And I think when you really think about the fact that every single hash involves the header being fed in, it being hashed, and then being checked against the difficulty target in full, optimizing the delivery of the header, and then cutting out a little work by only checking a part of the hash produced by the ASIC chip could really add up to a lot in terms of electricity savings, because with less bits moving around, less computing cycles, you're burning less electricity. And I really think that, we've been so obsessed with companies like GMO and eBang trying to give Bitmain a run for its money, that I think we might see Intel kind of just swoop in here slowly over the next year or two and really give the landscape a huge shakeup, like a lot of Bitmain's competitors are at the moment. And I think, really, it should have been obvious that something like this was coming, with the fact that they didn't dive in and they really took their time after having an involvement with 21 so early on to just kind of see how the landscape plays out before they actually made a significant investment in the space themselves.
Yeah, I mean, these chip fabricators been in competition for a long time, and it does make good sense to kind of wait and see what your competition's plans are before you actually put your foot in the arena. And judging from the patent itself and the way that you're describing it and the way that I was reading it, it does look like they've done a lot of research and they understand what they're doing. So, I mean, the timing of it does sound like kind of it was just sort of waiting to see what the competition is going to do, and once they've announced their plans, you can start moving forward with yours, and see if you can jump ahead of them in this game. And actually, there's just lots of room for this competition coming in to see who's going to be major players. And I mean, Intel is one of those major players in chip fabrication already, and so like, why aren't they in it? And yeah, I mean, a good reason would be just to bide your time and see what your competition's going to do. And, yeah, just speaking of that competition, man, I mean, man, what are you going to do now, man? GMO, eBank, Canon, Intel. I mean, it's just going to continue.
Mm-hmm. And I mean, it's really like, depending on how quickly they come to market, they could have effectively just slowly been doing R&D and wait for a bear market to burn out other companies. And then depending on the nanometer size, like all of the efficiencies they can really develop in a chip over competition, like there is a potential there for them to just kind of swoop in with something hugely superior to existing equipment, while pre-existing ASIC businesses are really feeling the burn with the price. And I mean, really could wind up leading to a huge hand shuffling in terms of the miners involved in the space.
It could, man. I'm just thinking they've made some huge strides in mining already with like we've talked about Brains OS and how long open sourcing their firmware and just efficiencies found already. So it'd be interesting to see if they have made some major development.
Booger's guy in the troll box is asking, "Are you sure Craig Wright didn't patent it first?"
Oh yeah, boogers. I don't know. That's one that I guess the courts are going to have to decide. I think that's everything goes on in BCH and SB it's all within the courts.
All right, and I guess next up, so I just wanted to ask you guys, even though Janine mentioned it at the start of the show, you remembered to use your fake identity when you were shilling ICOs, right?
I think I forgot to put on my mask, man. No, yeah, I avoided that like the plague because I sensed something like this might be coming.
So Floyd Mayweather got slapped with a $600,000 fine for receiving $300,000 to promote 3 different ICOs, and by the and also DJ Khaled, although I don't recall the details of the amount of his fine or what he actually received, also got hit with a similar enforcement action. And apparently the SEC has a long list of people to get through in terms of prosecutions for this kind of activity. So yet another example of ICO told you so.
Yeah, I mean, like they're not joking around, I mean, like I've been hearing this phrasing of crypto sweep, not recently, and I mean, like yeah, they're moving in. I mean, like we've seen them, starting to go after different groups, and I mean, like celebrities are, they're going to go after them too, and yeah, it looks like they're trying to hold even just like small YouTubers accountable that have been pushing ICOs, and I think it was interesting the way that they did make the distinction of like, if you disclosed it though, you're in clear. Like if you, as long as you disclose that you're being, paid by this group, and it is a security, and I guess it's all registered with the SEC. I guess that's above board for the SEC. It's just like for the past years now, it's just been pretty wild west to just anybody jump in and say, hey, I like this, hey, I like that, and running with it. And those videos are still on YouTube. I'm sure they're logged somewhere, and we might see a long list of guys that are going to have to pay a little bit.
Yeah, and this is kind of what I'm suspecting is the reason why Civil hasn't gone through with its second token sale like they were saying they would, because if they screw it up and they do get implicated as having tried to sell security, the reason that, in fact, the reason they didn't get implicated this time, according to Preston Byrne, was because apparently because they offered a refund, anyone who had bought tokens or whatever could get a refund of those tokens, and so that like if they would be considered a security, that gives them like, I don't know, a pass, or if they do that. But if they go through with the second one and they get deemed a security, that means that all of these journalists who have like signed up to be partners and have received tokens and compensation and have been telling people, hey, go buy this token at the sale, you would be in some shit, I assume. So I'm not surprised that they have delayed talking about it, because that's, I mean, it wouldn't even be easy to like take you down, because most of you are in Brooklyn. Like you chose literally the worst city in the world to do an ICO. Great job.
Dude, it makes me wonder, like, what are they going to do about CNBC and Ripple and all those guys up there that have just been like, hey, here's how to buy Ripple at the top. And I mean, like, I don't know. We'll see what happens.
I mean, I feel like Ripple is like, I don't think that one's going to be one of the coins that they, or tokens or whatever that they go after, because
Sadly,
I feel like it's I don't think they're like Ethereum, not going to go after it. They'll go after obviously tokens on Ethereum, but not Ether. They probably won't go after Ethereum, probably not Ripple, but they will go after things like, obviously, BitConnect, wannabes and stuff.
I think Ripple would have to actually actively be declared a security, but honestly, I'm more interested in the anonymous crypto Twitter people and really how far the SEC is going to push with this, because unless you've never linked a phone number, unless you've never linked an email address to which you've linked a phone number or logged into off an IP address without a VPN, and unless you've literally created your entire Twitter account with nothing associated to your real name and used proxies or VPNs every single time you've ever logged into Twitter, all it takes is a subpoena to Twitter. And you think that that handle and that name is going to stop the government from finding out who you are? Like anybody who honestly thinks that is deluding themselves and needs to sit here and wonder why anonymous people like myself or Mr. Hoddle or many others have never actually engaged in, well, at least what I think is unethical action like that. Because if they want to find you, they're going to find you. The only person you're hiding your name from with that avatar is other random assholes. That's not a shield against the U.S. government.
Yeah, it's going to be a wave of enforcement.
Alrighty. So next up. Sure, for many reasons, everybody has noticed the G20 summit that recently happened in Argentina. Well, all G20 nations have signed a agreement or a declaration to look at regulating cryptocurrency. And they're pretty much going to be throwing it under the FATF, the Financial Actions Task Force, to deal with money laundering and countering financing of terrorism, and not really looking to create any kind of crypto-specific regulations or bodies at this time. But let's really strip away all the horse shit here. So they're worried is money laundering, is finance terrorism, consumer and investor protection, market integrity, tax evasion. Well, let's just cut to the bullshit. It's not a widely used money laundering vehicle. It doesn't have the liquidity yet. A terrorist organization trying to fund themselves with cryptocurrency is retarded. These people don't give a shit about consumer or investor protection. These markets have about as much integrity as any other market out there. What's the thing they're really... Tax evasion. That's what they're really worried about. And honestly, I want to see how this plays out. Because they might all have signed a declaration of intent at the G20. They're all going to be coming back and looking at this and kind of sweeping things under the jurisdiction of the FATF to handle with the threat of money laundering and terrorist financing, air quote. But I think it's dead obvious that all they really give a shit about is the potential of tax evasion. And what they're probably really going to be looking at is the amount of tax revenue that's collected over the interval before everybody sits down again to reassess this issue. And I'm not so sure that that's something that a group like the G20 can really get consensus on. Because if things do continue growing, continue exploding in size, continue creating economic opportunity, why would you, as a country, help all the other countries in the G20 with an enforcement framework, with reporting people, who owe tax liabilities to other countries, helping extradite them to pay taxes there, when you could try and lower your own taxes and attract this economic activity to your own country. Because this is something that's really been talked about for a while now, and it's so far just been making statements, empty agreements, signing something like this declaration of intent, but there really hasn't been any kind of concrete or systemic action taken to address this issue. And I really don't think, looking at the incentives here at a global scale, that there really will be. When everybody sits down at the table and starts realizing, if we don't play ball in a comprehensive way on the global scale, then my country stands to benefit from this.
Yeah, it's I mean, like, you know, what do we expect out of somebody? Are you still around, or did you cut out? I'm sorry. Are we done?
No, I'm done.
Okay, yeah. I mean, like, what do you expect, I guess, out of some guys like the G20? You know, they're going to come in and say that there's something going on where, you know, hey, we're not in charge of the money laundering going on, so we should, you know, enact some sort of enforcement against this. And I mean, yeah, I mean, like, if you boil down all the BS, I mean, you know, like, should money laundering be technically illegal, or, you know, like, all the money laundering going on within the current construct and the way that that's all done, it's just like some BS. But I think, like, a real thing I read into whenever I was reading this was, like, towards the bottom of this article, they were talking about India. And I know that India is just kind of up in the air right now, and we're just wondering, what are they going to do as far as creating some regulatory framework for Bitcoin and cryptocurrencies. And I mean, it says that India appears to have spearheaded this initiative Friday, presenting a 9-point list urging the G20 countries to combat fugitive economic orders. And I'll just read the quote from the Indian Prime Minister, who said, the FATF should be tasked to formulate a standard definition of fugitive economic offenders. FATF should also develop a set of commonly agreed and standardized procedures related to identification, extradition, and judicial proceedings for dealing with fugitive economic offenders, to provide guidance and assistance to G20 countries subject to their domestic law. And I mean, like, I don't know, it just sounds like they are not in a favorable light with crypto. And yeah, I just thought that was kind of an important takeaway from the story.
G20 sounds like a token standard. They should launch. They should launch a token and say, "Give us all your monies."
Yeah, review.
I think you're right, though, Rick, because I think India's attitude in really pressing for a lot of this is kind of showing, I think, their intent to really go full on and ban all of this, and them kind of worrying just about how futile that'll be if they don't have most of the other major nations of the world on board. And I mean, like, that's exactly kind of what I'm saying here. Like, India kind of tipped their hand by pushing that hard. And when you look at countries like Japan, which are embracing this heavily, South Korea, France, the US, like, do you really think, oh, okay, yeah, we'll just do that, when we're looking at an enormous amount of economic activity and growth and market development that could potentially bring us a huge amount of revenue? I don't think they will. Like, it just doesn't make sense when you look at individual players' incentives.
Yeah, man. And I mean, like, supposedly this summit's going to be held in 2019 in Japan. So maybe it'll be a showdown there next year. And then supposedly they'll have all these rules and guidelines all shored up by 2020, right around the time of the happening. And I mean, like, yeah, it's still going to be a showdown. But yeah, I think we're definitely seeing some virtue signaling, or, you know, just some signaling from India as far as, like, their plans.
All right, and I guess next up, let's try to keep it from meandering too far, but we covered last episode the Tabac shops in France setting up infrastructure to sell Bitcoin vouchers with a partnership with Kepler K. And the French equivalent of the SEC, the Autorité des Marches, I don't know. I'm done trying to pronounce things and sounding wrong. But the French regulators have issued a statement that with a capitalization of 50,000 euros, this company does not have authorization or approval by a French authority and is likely not to provide any guarantee to their customer base. And it really seems kind of confusing because the statements issued previously stated regulatory approvals, stated like all of this, the software has been developed, like you had the company whose name I forget developing the software, this Kepler K company developing inroads to actually service the liquidity on the Bitcoin side, and all of the Tabac shops ready to roll this out. And now this statement that no, like you have no approval. We aren't convinced that you are capable of handling this in terms of consumer protection. And then what I thought was the most interesting was the statement that the Kepler K company only had a capital of 50,000 euros, which I thought does not seem right. And the article I'm quoting from Coinbase actually is kind of speculating that the authority might actually be confusing Kepler K with another company, Kepler Chevrolet, which is an independent financial services firm that has nothing to do with Bitcoin and the cryptocurrency or any of this deal being set up right now. And as of the last time I refreshed this article, like nothing has been altered on the Kepler K website stating that they're not going through with this or anything. And really, like given what's going on in France now with the yellow vest riots and just the huge amount of developing social instability, I'm really not sure what to make of that development at this point, or what's going to happen, or even really if this statement from the authority, like what's the basis for it. And given how high taxes in the country are really, I don't want to say what these protests are about, but definitely a big factor in it. This kind of leads me back to the G20 issue with tax evasion. If this statement by the French regulatory authority might just be a knee-jerk reaction to these protests, the worry about making something like Bitcoin that widely available, given their attitude towards soon to be implemented taxes in France, and just kind of trying to scramble and prevent a means to avoid paying taxes being so widely accessible in the country.
Yeah, I'm curious too. Like this was kind of like a quick pushback on that story we had last week, and it looks like they're upset about like maybe there's not enough liquidity there to actually provide the service. But I mean, like seems like is everybody going to be rushing to every tobacco shop in France to buy Bitcoin? I mean, like it's just sort of testing the market. I could see like how you're doing it. I mean, you don't want to. Anyway, I mean, like really, like you're saying, there's a lot going on there with the protest, and I wish we really knew kind of more what that was all about. But I mean, like it certainly does seem like it puts things in a state of flux, and I'm sure that there's some people trying to find a way to skirt around the issues that they're facing. I mean, Bitcoin is something that's great for that, and also just sort of protect yourself from who knows what's going to happen. I mean, like times are pretty tumultuous everywhere right now, and if you all of a sudden have hundreds of thousands of protesters in the street for days on end, shutting down traffic, and people aren't able to get anywhere, I mean, like that's one of those moments where I'm sure people in the country probably would like to start buying some Bitcoin.
Yeah, the only thing I know about the protest going on in France is that I'm not completely sure, but the French media are claiming it has something to do with rising fuel prices. I don't know
Yeah,
if I tried looking around
Yeah,
earlier.
it's I would say that is a trigger of a
Yeah,
lot of
it's
other
a trigger.
underlying
Yeah, so it's probably a trigger. But
there.
so
So
far, oh, sorry. Did I cut out or did you cut out?
no, it was probably me lagging. You can go ahead.
Yeah, so it probably is just a trigger. That's just what they're stating. The cause of this particular protest is in terms of what got people out the door. But the only thing I've heard that's happened so far is that Macron called for like emergency shutdown or what's the word for like emergency mode in a country where you're like deploying military people?
A state of emergency.
Yeah, state
Although
of
last
emergency.
I heard, they were going to attempt to continue dealing with the situation without it.
Yeah, well, the reason they're doing that is because when he said he was contemplating calling a state of emergency, the police and the firefighters have said that they won't participate, or at least a large enough portion that that's probably why. There's videos of like, I don't know, I couldn't tell because the person that was in the video had his back to the camera, but someone was saying that there's a video of him like or someone in the French government like standing by firefighters who were like turning their backs on this guy. It might have been Macron, I'm not sure, but I saw that video, and there was a video of also a bunch of police officers taking off their riot gear, and then the protesters were cheering and shaking their hands and stuff. So it sounds like the law enforcement aspect does not want to be involved. And so that's probably why he's saying, oh, we're going to work on this a bit more because all of my bodyguards have decided not to help me.
Yeah, like I don't want to be like a melodramatic looking at it from the outside, but from my point of view, this like it really does look like a full-on revolution boiling up, not just like another instance of Antifa thugs running around smashing things.
yeah, that's what I mean. You start to see those breaks, and I mean, like, yeah, maybe it was just a trigger from gas prices, but the reality is it's all these other things in the background, and the people enforcing the laws. I mean, if it's something that they don't agree with on a value, that their values align differently with all that, and I mean, you'll start to see them break ranks, and that is like a sure sign of a fracturing within the government.
Sorry if that just made a loud noise. That was my mic falling over.
Is that right?
So I was just looking a bit more, and I should clarify that the part about it being triggered by rising fuel prices, a big chunk of that has to do with the fact that France is apparently going to impose a larger fuel tax on cars, which is what a lot of countries in Europe are considering doing to cut down on the number of cars that are operating in their city. So apparently, it wasn't just fuel prices; it was specifically a fuel tax that contributed to the protest. So that doesn't surprise me.
Mm-hmm.
Yeah.
All right, but next up, 15 minutes for things. Real quick on this one, Bitfinex has announced that they are going to be doing USDT, USD, and Euro pairs. So actually trading Tether against fiat as opposed to just simply treating Tether deposits as fiat balances when sent to the account. And honestly, I think this is pretty interesting because this also coincides with Tether on their website reinstituting full redemption at a guaranteed one-to-one rate. And they claim that this is to be impartial given other stablecoins entering the market. But honestly, I think this is just a brilliant business move in the sense that opening up these trading pairs on their exchange allows people to effectively take free money from idiots who will trade it actively on the exchange at a discount instead of simply redeeming one-to-one through Tether themselves. And let's just say if Bitfinex themselves were to take the other side of some of those trades, you're pretty much making a decent a bit of money there just because idiots don't believe that they have money. All right, though. Next up,
Yeah, let's
3 to
keep
go.
burning.
So members of VanEck, SolidX, and the CBOE met with the SEC earlier to discuss some of the ETF proposals up for review right now. And instead of dealing more with the regulatory rules and aspects of things, they in this meeting supposedly dealt more with the market structure and integrity to alleviate some of the constant concerns about market manipulation and market stability. And honestly, the points that they made are spot on. And like honestly, if the SEC continues spewing the same nonsense after this, fuck you. Like they're pointing out one the entire dynamic between futures and spot markets, which follow each other very tightly, and show that both aspects of things are well capitalized and actually mature in the sense that you don't really have one swinging wildly away from the other and kind of leading at a huge lag, which is something you would see in a very undercapitalized or manipulated market. Two, they're pointing out the dynamics of manipulation at any of the exchanges that the SEC would point out specifically as prone to manipulation as irrelevant because of the well-developed arbitrage linkages that exist in this space now. Pumping or dumping the price on a single exchange is not enough to manipulate the entire global market because people are arbitraging. And so, in order to really affect the global market one way or another, you are going to have to exceed the amount of liquidity that is sitting there to run these arbitrage trades before any kind of move on a single exchange is really going to start having a systemic effect on the global markets overall. Like, it's not just dump this exchange and everybody follows. If you dump that exchange, somebody's going to buy there and sell at another one and buy there and sell at another one until that's smoothed out globally. And unless you have more money than the person or persons doing those trades, you're not going to distort the overall market. So it's not as simple as just a shady exchange or two and you're steering the market around by the nose. And then three, they point out that in the case of things like oil or gold or silver, where there are existing ETF products, you have all kinds of opportunity for insider information to allow people to insider trade on changes to the supply on the market. Whereas with Bitcoin, it's fixed. There is no such thing as insider information about the supply of Bitcoin being created, changing for anybody to trade on. That is publicly known to everyone and will always be so.
Yeah, I mean, here it is, another ETF story. These ETFs, why don't they have it yet? I mean, I can understand their arguments, but it does seem like the SEC just wants their boys in first, or they're just not happy with the exchange infrastructure. I can understand what you're saying, but I can also sort of see these guys want their insiders, and they don't want people having these. The big players in the space with their own relationships already sort of formed and then coming in and then they just give them approval. It's always their guys get in first. And it just sounds like they're waiting for basically an entire KYC exchange infrastructure with everybody knowing who everybody is and, that they're all using products like USDC or Paxos or Liquid or whatever it's going to be to where they think that the system is just lot more structurally integral.
Mhm. All right, second to last up. Coinbase has quietly opened its OTC desk earlier this month. And right now, it's just pretty much tied to, sorry for the motorcycle, it's only available through Coinbase Prime. I was just about to say crime. It's so pretty much
Freudian slip.
just institutional customers, and they're planning on integrating it in the future with Coinbase custody, so that you will have a linkage of custody options for different companies to deal directly with the OTC desk. And really, it's here's Coinbase expanding again, trying to bite into a bigger piece of the pie that they're not getting a chunk of again. And yeah, uh, let's see how this plays out for them, because OTC desks are very well established in this space. And I mean, anybody who really pays attention to these markets knows that that's where most of the volume is actually happening. And so it goes without saying that that's where most of the actual trading fees are happening.
Yeah, Coinbase sees a pie. They're going to try and eat as much of it as they can. And yeah, like you're saying, I mean, we'll see how it plays out for them. I mean, they've made some pretty bad decisions in the past. And I mean, they're kind of, I don't know, from my own perspective, it's still sort of up in the air as far as what's going on with insider trading and the possibility of listing securities on their exchange and all that. So, I mean, I don't know who's going to run over there with a bunch of volume to be trading with these guys. I mean, they're kind of putting them in the same light as Bitmain. They were once some people that were, the go-tos in the space, but now it's just become like a whimpering light. Hopefully, it's just dying out. But I could be wrong on that. We'll see.
All right, and off to the races, I guess, so I can get to sleep for my flight tomorrow. Uh, Lightning Joule was recently just demoed and is available in alpha, which is a browser plugin to integrate with a Lightning node that you are running on your local machine or remotely, and integrates Lightning payments into your browser directly. And honestly, I don't really know how I feel about this, because, I mean, first off, it's integrating into an LND instance, so it's not boiling everything and key management and all of that into a browser, which is not really the most secure thing to do. But they're also talking about hosted Lightning nodes potentially in the future, to lessen the requirements of having to run a node on the local machine or one yourself and configure remote access. But I'm not really too sure how I feel about that. But I mean, nevertheless, it is nice to see people actually playing around and really developing as many different tools and ways to use Lightning as possible, because I mean, you can't really rule something out until you tried it. And given something that's at its core designed to really be a micropayments system, I mean, it would be kind of stupid to not try different methods of integration into web browsers and other ways to really make that process as seamless as possible. You know, think Nick Szabo's analysis really kind of hits it the most accurately on the head. Like, if you start introducing too much friction and too much conscious choice and second guessing in terms of making small value payments, then at the end of the day, you're really overloading a person with too much mental cost to really make it worth the economic cost in terms of pricing things at really small intervals.
Yeah, I could definitely get that point. But I thought it was a pretty interesting development to see just like a a browser extension where you can make a lightning payment to someone. And, like you're saying, I mean, it's just good to see all these developments. And I mean, if it's not the best way to structure micropayments, then it won't work out. But I mean, it's, it's just always good to see people developing these things out as just trying all the different routes, right? And then we'll see which one's the best.
Alrighty. So it is now final thoughts time.
All right, I've got a final thought here. Congratulations to Reddit for getting over 1 million users in our Bitcoin. Shout out to Stop
Sock
and Decrypt.
puppets. I'm sorry, sock puppets, not users.
Well, it's over 1 million, so I mean that's a pretty good number. So yeah, shout out to Stop and Decrypt and Bashco over there for trying to keep the conversations always pertinent to what's going on, and building that community to over 1 million, even if there's some sock puppets thrown in there. And just another final thought, just going to see, did you guys catch anything about Satoshi possibly accepting a friend request on the peer-to-peer foundation?
Yeah, I don't know.
No? Another Satoshi's back, man.
No
All
comment.
right. Yeah, those are just my two thoughts.
All right, Janine, spit them out.
I mean, my thought has mostly been about the ongoing case to try to get whatever sealed indictment or complaint or whatever it is that the U.S. Justice Department is keeping secret from us about Julian Assange. And unfortunately, Ecuador is not at all being helpful with that because they are still barring him access to his legal counsel at critical moments, such as the day before the trial, or the hearing, not trial. Unfortunately, the hearing, the judge that was presiding over it is kind of well known for it's kind of no secret that she almost always, if not always, sides with the state and tries to keep classified documents classified or sealed indictments sealed. So the chances of her not putting up a fight are pretty low. Thankfully, she decided to give both sides more time to submit information before she makes her decision. And I believe she delayed the trial, I keep saying trial. I believe she delayed the hearing or the decision to sometime this week. I think she delayed it by at least a week. Unfortunately, though, Assange was not able to prepare because the embassy was not letting his lawyers get in. They did recently allow access by some journalists, specifically one who has been following the case, Stefania, from, I hope I'm La Repubblica, and she was one of a few journalists that was allowed in to talk to him. I don't know if she did an extensive interview or if it was just a short meeting, but she said that he looks like he's lost a lot of weight, is really skinny, but he was still. She said he was very lucid and rational. So hopefully that's the case. And so far, the consequences have mostly been physical, even though that's still really terrible. So Ecuador, first of all, we also found out that Ecuador doesn't even own the property that the embassy sits on. It's owned by someone from the United Arab Emirates, which I find really weird. As far as I'm aware, I don't think there are diplomatic consequences for that I know of. But it's still just a really weird situation when a country doesn't own the property that their embassy sits on. It just seems really strange. Or at least it should be owned by the country where the embassy is, located, but whatever. So yeah, that's mostly what I'm thinking about, and I hope other people are thinking about it because this might be a critical month.
I certainly am. I can really appreciate that update because everything that goes on with this with Assange over there. I mean, that's like a pivotal importance. I mean, like we're really seeing just the efforts and strains that they'll go to try and suppress actual factual information, and every little thing, like just what they didn't let his lawyers in. I mean, like we need yeah, every little update's important on what's going on over there, and wish them the best. I know it's got to be tough in there.
All right, my final thought is a song, and then I'm gonna disappear and go to sleep.
Hold up. Before the song, final thought. Thanks everybody in the chat for being so awesome and just like having you guys around. It's been a great show, just like real chatty over there in the troll box, and it's just been a lot of fun. So appreciate you guys showing up for the show. Everybody have a great week from Thai Club Digest.
Adios.
Later, everyone.